Alright, Assalamualaikum. Today we are going to proceed from the first step that we provide, or we prepare the template for our financial statement. Now we proceed to the next step. Yeah. So the first thing I want to introduce to you is how we use color to make our life easy in order to prepare our financial statement. Alright. First of all, I have these two color highlighted. First one is yellow, the second one is pink. So this yellow is going to be represent debit and pink is credit. Alright. So what we should do, first thing is to put some color on the debit credit on the financial report. Which one belong to debit, which one belong to credit right now. In the financial statement, the sales should be credit, so we have to highlight the credit. Yeah. And then the net sales should be credit too. Yeah. And then cost of sale must be debit, remember. Okay, so we have debit, so put it color debit. Okay. And then we have expenses also as a debit item. Then net profit can be net loss, either debit balance or credit balance, so leave it there. And then we have non-current asset. Yeah, non-current asset is an asset, so it must be debit. Put it color debit. So we have cost as a debit, and the current value must be debit. Alright, so we have current asset debit because it's an asset. Alright, so whereas for the owner's equity, it must be credits. See? And then non-current liability must be credit, and current liability must be credit. Alright. So the first thing. See? Now, from the down presentation, we have a beautiful and meaningful financial statement. So the next step, what we should do is to transfer the item that we have in the trial balance. Don't waste your time. Yeah. So transfer one by one. Don't even skip. Alright. Okay. The first thing we have is a capital 65,000. So capital 65,000 already have the place here. Okay, 65,000. Alright, put it here, 65,000. Alright, so next we have cash in hand. Okay, cash in hand is your current asset, right? So put it here, cash in hand. And then this cash in hand, put it in the temporary column. Why? Because all the current asset and current liability and the expenses and the revenue. Oh yeah, I think we forgot the the other revenue as a credit part of your increase of your equity. Okay, and then your other income and your expenses must be is going to be changes due to the some additional information, also some accrue or prepaid, for example. So we have to put the item or transfer item in the question to the temporary column, and because we are going to finalize after we see some adjustment need to be done. Okay, so here we have cash in hand, put it under temporary column. Alright, 4,400. Alright, so and then we have cash in hand, cash at bank. Okay, here. Alright, okay. Like this, cash in hand, cash at bank, 4,000. So cash at bank, so I'm going to just say stated bank. I mean the column, which is 20. Alright. 26,095. And then I have account receivable. I already have it here. Receivable will be 20,000. Yeah. Okay, and then I have account payable under your current liability. This is account payable. Okay, account payable. So 11,200 from the question, and we have sales. So put it under sales. So sales, there's no changes most of the time. You can simply no need to have a temporary column. Simply post to the final figure, which is the amount is 82,100. Okay, then we have purchase, right? So purchase, right? For the cost of sale, most of the time there's no changes. If there was change, you can put it below that. So just put it here, 35,600. Alright, so return in what? Return inward actually reduction or reduction is return of your sales, right? So return inward or sales return, return inward. Okay, so return inward 1,800. Alright, the best thing, since we already have a debit and credit color, so we are going to stick to the color. So we know that sales is a credit, so you can color the credit, highlighting the credit color for the sales, whereas for return inward is a debit. So debit means this reduce, so you have to minus. You can have bracket to show that this return inward will be reduce the sales. Okay, and then purchase we have a debit. Alright, so we're going to part of the cost of sales, and then the trade receivable we have debit here, cash in hand is a debit balance, and then bank is a debit balance. Put it the color, much easier and clear and cheerful and colorful and meaningful, of course. Alright, so next we have return inward. So return inward is actually purchase returns. Put it here. So return inward, so return inward, return, oh, it's not return inward, return outward. Return inward here, right? 1,000 so return outward. So return outward, 2,000. Okay, the return outward is credit, so color the credit. And then we know that return outward is reducing your cost of sales. So you can put simply bracket part of the reducing. Alright, so we have inventory, opening inventory 33,000. And then from the questions is a debit, so never mind, put it color debit because it's part of the cost of sale. We need to add to get the cost of sale. And then you have carriage inward. So carriage inward actually part of cost of sale, right? So put it under carriage inward. Alright, so 500. So this is debit because it's increase your cost of sale. Fine. Alright, so next we have office equipment cost. Yes, office equipment is non-current asset, remember? So put it in here, office equipment, okay? And then 10,000 cost. Alright, so it's a debit balance, right? The question said it's a debit balance, so you color the debit color, which is the yellow for my color coding. Alright, from there we have, oh sorry, I think we're missing the allowance for that from the question. So allowance for that. Alright, here the 100, so we are going to put the as an allowance for impairment of that here 100. Okay, it's a credit, right? So since it's credit, we color the credit in the statement. Much easier. Alright, so next what do we have? You have office equipment at cost. Right, then we have motor vehicle at cost 50,000. So write down the name, motor vehicle. Then the cost will be 50,000. The cost will be at debit balance. Okay, fine. We color the debit. Okay. Next, we have accumulated depreciation. So the space is here. So we know that accumulated depreciation will decrease. So it must be credit. So we put it bracket already to show that we are going to minus this amount. So this is last year figure. Alright. So it is last year figure. So we have to put it here in the accumulated depreciation column, which is 4,000, and then 18,000 for motor vehicle. And these are all the credit balance, so you color the credit. So you are going to have some space here to show that this accumulated belong to last year will be added. So will be added to the next this year, current year, because all the asset is depreciate every year. So last year we already depreciate, then we depreciate more, so you're going to add some more. So add some more. Alright, so next we have salary expenses. Alright, so salary expenses will be your expenses. So put it under salary, put it under your temporary column 21,600, and it is a debit, so you color the debit. Now why it is debit? Expense debit because it reduces your equity, remember our rules. And then we have rental expenses. Let's put it in a temporary column 13,000, which is debit, right? Alright, so next we have insurance expenses. Okay, insurance expenses. Rental expenses, insurance expenses 1295, which is debit. Alright, so next we have water and electricity. Water and electricity will be 1350. Alright, is your debit. Okay. Next we have discount allowed. So discount allowed actually discount that given to the customer because of your sales. So discount allowed will reduce your sales. Discount allowed. So discount allowed will reduce your sales. So reduce mean you have to deduct. Then how much is it? 250. It is debit. You color the debit. See? Alright, so next you have commission receipt. So commission receipt is part of your other income. So write down the name here. Commission receipt. Okay. Then this one again, put it under temporary column. Will be 2790. It is a credit. Okay. Then we have loan. Yeah, so loan is a non-current liability. Yeah, which is at 10%. Yeah, loan. Yeah. So no changes most of the time. So can post to the final column, which is debit, because it's loan liability rules must be debit. Okay. So next, what do we have? Alright, so we have discount received. So discount received sama actually given to the from the supplier to us due to our purchase. So again, to reduce your purchase or your cost of sales. So here, the discount received. Yeah. Is reduced, so you have to minus. What are they? 3,700. Are they debit or credit? It's a credit. So color the credit. Done. Alright. So with this step, you already complete. So you can get already some marks from your transfer process in your financial statement. So next thing, what you should do is you are going to do adjustment. Yeah. So adjustment actually sama-sama. This is new transaction that you must have debit credit rules once you're applying or you recording this one. Okay, let's say you have what inventory at the end of the year is 25,000. This is ended over here. Yeah, 25,000. So you must have debit credit. Yeah. So inventory actually is closing stock. So closing stock is actually your current asset. So put here you have current asset. Oh, this is not current asset. You have your closing inventory. Closing inventory. Alright. Enter to the final figure, which is 25,000, and must be debit. Your current asset must be debit. And remember, this is new transaction. We have to debit, and you have to credit somewhere. So the credit will be in your cost of sale here. Alright, so credit is 25,000. If this credit of your cost of sale means you reduce your cost of sale, so it must be in the bracket. So here we have debit, and then next here we have credit. So complete already your double entry. Alright. So next, what do we have? Okay, next you have depreciation. Depreciation for office equipment for current year actually 20% every year. So this year we have to charge another 20% using straight line method. So you have to look at the straight line method mean you are going to charge on the cost. So office equipment you have 10,000. So you're going to depreciate another 20% this year, which is 2,000. Alright, so put it 2,000. So the 2,000 actually increase your accumulated depreciation to reduce. So you already credit here, you must debit somewhere. So you must debit your expenses in the name of depreciation of motor vehicle. And then it is your final figure already under adjustment, which is this one we credit. So this one we must debit 2,000. Yeah, kalau debit. See, you already complete credit, debit. See? Alright, so next, what do we have? It's a motor vehicle. Right, motor vehicle 20% reducing balance method. This is another easy to tackle. So how do we do 20% on on the reducing balance method? You have to reduce first. 50,000 debit, reduce 18,000 or credit 18,000, so it become 22, right? So 22,000, then you multiply with the 20%. So 22,000 multiply with the 22,000. Hold on, this is, oh, it's not 22, it's 32, right? 50,000 minus 18,000 is 32,000. 32,000 multiply with the 20% will be 6,400. Okay, 6,400. Now it's going to reduce your asset or increase your accumulated depreciation, which is credit. Then you must debit again part of for expenses. Alright, which is depreciation for the motor. It's not motor. It's office. Oh, this one office equipment. Hold on. So next one is a motor vehicle. So motor vehicle, which is will be 6,400. Yeah. Yeah. So here we have credit. This one we have debit. Complete our transaction or journal entry. Alright, so next we have bad debt written off. Bad debt written off somehow is confirming that your receivable unable to pay due to certain reason, which is concrete one, maybe bankrupt, maybe died, alright, okay, or lunatic, or you cannot collect your debt, so you have to reduce your receivable. So receivable, in order to reduce receivable, which is already 20,000, so you have to reduce, you have to credit. Yeah, so credit may reduce whatever debit, you have to reduce one. So once you have credit, you have to debit. So debit, the best thing is you have to debit whatever in the allowance for impairment. That's your goal first. But as you can see, the allowance is not enough. So you simply write off the whatever amount that you have in the beginning. So you just write down your 100. Alright. So this is credit, you must debit. Alright. So here you are not completing your double entry because you credit 150, you have to debit 100. This is because the remaining balance is 100. So you have another debit of 50, which is not enough. So that 50 you have to charge as your bad debt for the year. So you have your bad debt here. So you have to debit more by 50 to complete your double entry here. Credit 150, you have to debit 150 as well. But you first is debit your allowance for impairment because that's sticking together. This is preparation we made. So this is like you have estimate the 100 amount will not be collected, but suddenly the data or the actual story is 150, so you have to deduct the 100 that you provide at the beginning, then the extra 50 you're going to charge your expenses. So now you have double entry is completed already. You have credit 150, you debit 100, and debit is this one is another 100, so you already rebate 150 as well. So complete your double entry. Alright, so next you have the allowance will be 2% on receivable. Alright, so this is the charging. The allowance will be 2% on the receivable. So this one telling that your final receivable, from 20,000 will be reduced 150 because the receivable gone already, need to be written off. So you leave your trade receivable remaining will be 19,950, right? Oh, 850, sorry. 19,850. So from this 19,850, you are going to charge or you are going to provide 2% because you are going to say that this 19,850 you still have a doubtful that 2% may not be paying. So 2% will be 19,850. How much? 38,397. Oh, right. 3970. Is that correct? Alright, okay. 2%, sorry. Kalau 2% will be 397. Is it? Alright, so 1919 will be 38. 850, 85, 160. 160, 17. Alright, 397. Alright, so this one you are going to see that 2% of 9850, which is 397, is going to be provide as the another estimation that they cannot pay. So this one allowance for impairment must be credit because it's reduced your receivable. Alright, so you must credit. Okay? So once you credit, as you can see that you have to credit full because your allowance is already accomplished. Your already is already depleting. It's, the final result is 0. So this is why you have to have a new transaction with 3397. So credit. So you have to debit that another 397 as your expenses under the name of increase. Yeah, increase of doubtful debt. Okay, how much? 397. It must be debit. Alright, okay. So it's depend. If the zero, you have to provide 2% complete. If the some figure, so you have to add some more figure. The increment or the decrease will be the double entry. Alright. Since it's already zero, so you need 2%. So you full charge of your doubtful debt as part of your expenses, reducing your receivable to give the actual amount of your receivable. Alright. Okay, done. Yeah. Next, you have the owner. Yeah, took goods 350. So the owner took goods. What should we do? The double entry. Took goods is under drawing, right? Since we have the don't have a drawing here, so put it under template column. How much is 350? And then it's reduced owner's equity. It must be debit. In your transaction, once you have debit, you must credit. So the credit will be goods. So the goods, actually, we are going to use account purchase. Alright, so the best thing is you are going to reduce your purchase. Yeah, so reduce your purchase by 350. So mean you have credit here, you have debit, then you have the credit, so your purchase reduce. Alright, okay. So next, what do we have? Alright, so cash, drawing the cash as well. So cash must be reduced. So you have to reduce cash by 220. Alright, reduce 2,400. Sorry, 2,400. So reduce the cash mean you have to credit the cash. So credit the cash, new transaction you need to debit. Yeah, so put it under your drawing. So your drawing will be another debit increase your drawing or reduce your owner's equity, which must be debit by 2,400. Alright. So next, you must this one credit, debit, drawing. So you complete your transaction. Okay. And then you have during business, the business has incurred and paid via check for cash hour of quantity 20 for good delivered to customer in another town. This transaction was omitted from the record. So mean there's one transaction in the name of delivered to customer for 120 using check is not recorded yet. So we have to record because that's our part of the job to make sure everything must be recorded in accounting. Alright? Okay, no omission. So we have to record the delivery. So delivery is actually, this is carry shower, right? Because it's delivered to customer. So if it is carry shower, put it under expenses. Yeah. So carriage outward cost how much? 120. So these expenses. So you have to debit. Then your credit will be using, because by a check mean using bank. So 120 must be credit, mean reduce your bank by 120. Okay. So next we have 10% of loan is actually taken on 1st November and the interest is loan has not been yet paid. Alright, so you must remember our accounting year is the 30th of June 18, right? So if you calculate your end of the year is the 30th of June 18, okay, then the loan actually taken on the 1st of November. 1st of November year 70. 1st of November, if it is 30th of June, so beginning of the year it will be 1st July, right? 1st July year of 70. So from 1st July, the 1st November, then you making the loan. You receive money from the loan. 1st of December year 17. So actually the interest start to be calculated or charged whenever you make the loan. So the loan actually is 10% loan. For 30,000, but you only make the borrowing from the beginning of receive the loan until you closing the date is for how much, for how many months. Alright, so you have 8 months, right? So you have 8 months. So you're going to charge interest only for 8 months. Alright, so the interest will be 10% for 30,000, which is 3,000 if there's 8 months. So the interest is not being paid yet. So the interest is actually part of your expenses. How do you calculate the interest? So you take 10% multiply by 30,000, charge only for 8 months, for 8 over 12. Alright, so 3,000. This one using 3 1. Alright, so 4 2 4 3 2 2,000, right? 3,000, 2,000. Yeah. Okay, so the 3,000 actually part of your expense, so you have to debit. So credit, alright, so it's not being paid yet, it's become your current liability in the name of interest accrued. Interest accrued. Alright, so you have 3,000. You can post to the final figure. It's 3,000 is 2,000. Sorry, it's 2,000, right? So if it is debit here, then you have to credit here. So complete your double entry. Alright, so next you have adjustment need to be done because you have some accrued. Accrued mean it's not being paid yet. If the water electricity expense you have to pay, but you still owe to the servicing company by 150. So you owe mean it's going to be your current liability. We are going to known as you are going to water and electricity accrued. Yeah, water and electricity accrued. Alright, so this is your liability because you haven't been paid yet, but you have to pay. So how much is it? 150. It must be credit because it's liability. It must be credit. And this is new transaction. We have to debit somewhere. So debit what? Debit your expenses and the name of electricity, which is 150. Electricity. Right? Don't we have water and electricity? Yeah. This 150. You have to debit. If it is debit in expenses, actually it's increase your water and electricity. And then commission received, you have accrued. Accrued commission received mean you should receive the 210, but you have not received yet. So if you should not have received yet, it is not recorded in here. So if you receive money, you become your current asset is your money lah, or is bank or cash. If you don't receive, but is that your right, so it's going to be your current asset as well, but in the name of accrued commission received. Accrued commission received. Alright, accrued commission received part of your current asset in the name 210. So if it is current asset, you must debit. Your asset must debit. So your transactions, your credit will be commission received here. Commission received here. Another 210. Yes, still your revenue, but you're not recording. Kus banget. Sorry guys. Subhanallah. Okay, diam. Do you mind? Quiet please. Telephone please. Alright. Subhanallah. And then we have prepaid. So prepaid insurance expense mean the payment actually belong to the next year. So you cannot put it insurance for the 205 in as your part of expenses because it belong to next year. So you have to take it out from the expenses by 205. How to take it out from the debit? You have to credit. Okay, credit means you reduce your expenses. Okay, finalize. And then you are going to debit somewhere. So rental expense actually part your prepaid, so part your current asset. So prepaid. Prepaid rental. Okay, prepaid rental 205. So this is credit, debit. Alright, so you know why I need just one piece of paper so I can have my double entry, do it concurrently and accurately and easily. So rental expenses prepaid by 1,000. Again, this is your expenses, but you pay for next year. It's become your current asset. So here you have your prepaid. This one, sorry, prepaid is not prepaid rental. It's a prepaid insurance. Okay, for 205. So we have to go for the insurance. Yeah, minus 205. Okay, alright, so credit here 205. Okay, then you have 1,000 for rental expenses. So prepaid rental. Yeah, for 1,000, this is again your asset. So you have to debit, then you have to credit. Yeah, take out from your expenses, the name of expenses. Rental credit by 1,000. Credit means you minus. Okay, so credit minus 1,000. Alright, so now, ta-da! Alright, so the question is going to give you 30 marks. Okay, once you complete this ones already, I think you can get 25 marks already in your hand. But if you want to have a complete marks, you have to complete the financial statement. So that's going to be our last part. Alright, so I'm going to proceed after this. Thank you.